Welcome, sir.
Okay. Very good afternoon to one and all. Welcome to Sri Sandeep Jain, President Bombay Metal Exchange, Sri Naveen Sharma, Vice President Material Recycling Association of India, and Sri Vikas Kumar, Ranka, Tax Advisor, MRAI, all my colleagues and all the participants. I stand honored to extend a warm welcome to all the participants of this webinar. I appreciate the support and cooperation extended by Bombay Metal Exchange and Material Recycling Association of India, MRII. All these associations have played a pivotal role in accelerating genuine grievance redressal at appropriate level and enabling us in CBIC to address and redress the problems in the right perspective. The role of trade associations in stimulating, shaping, and scaling the Indian economy is indisputable. I'd like to mention that the Directorate General of Taxpayer Services, a part of Central Board of Indirect Taxes and Customs, is headquartered at New Delhi, and we have 6 zonal units. The Mumbai zonal unit caters to the entire state of Maharashtra and Goa. The Directorate General of Taxpayer Services has a mandate to reach up to the taxpayers and to redress the issues which come up regarding awareness about the change in laws, rules, procedures relating to indirect taxes, that is customs and GST, and to wherever possible to clarify any doubts, any issues arising in the implementation and enforcement of law. It is our constant endeavor in the Western Zonal Unit of DGTS to bring in current and relevant topics, thereby facilitating the trade importers, exporters, traders, manufacturers, providers of service, and enriching their knowledge, enabling them to become aware of the change in procedures, which in turn enhances the duty compliance. Several need-based webinars have been conducted in the past by Mumbai Zonal Unit after taking inputs from the trade, and in many cases, trade itself has represented to us and has suggested issues and topics. And today's webinar is one such event. And the very important topic today is TDS and GST under RCM on supply of metal scrap. It is to mention regarding TDS and GST under RCM on supply of metal scrap that effective from October 10th, 2024, notification number 25 by 2024 at 2%, 1% CGST and 1% SGST on metal scrap transaction exceeding 2,50,000 between registered persons. Applicable categories include Chapter 72 to 81 of Custom Tariff Act. The buyers must obtain separate GST registration for TDS deduction, deposit TDS within 10 days after month end, and file a GST return by the 10th of the subsequent month. The important issues in the new notification include TDS per transaction. The TDS applies on individual transaction exceeding 2,50,000. This is an important point to be noted. Further, there is no TDS on imports. TDS under GST is not applicable to metal scrap imports. TDS credit utilization and the suppliers can utilize TDS credit towards GST liabilities or request refunds. B2B transactions only. TDS is applicable only when registered entities procure metal scrap from other registered entities. This is to be noted by all. The taxable value, TDS deducted on taxable value excluding CGST, SGST, IGST and cess. Contract-based TDS. If total contract value exceeds 2,50,000, TDS must be deducted even if individual supply values are below this threshold. This also may be noted. We have a very eminent speaker today, Sri Vatsar, Assistant Commissioner, Nasan, Chennai. He is a very experienced and seasoned professional with a very impressive academic qualification, including post-graduation in physics, electronics, telecommunication. He has a PG diploma in public administration and a doctorate in taxation. He has extensive experience in tax policy, anti-evasion, LTU management. He is a visiting faculty at premier institutes, has several hundred published articles, and also has authored a book on GST law. He is a sought-after speaker at various forums and is currently posted at NASN Chennai. His exceptional service has been recognized by the department by giving him Best Officer Award in 1999, CBIC's Chairman Certificate in 2016, and a Presidential Award in 2019. With these words, I welcome all the participants to this webinar, and I hand you over to my colleague, Reena. Thank you. Jai Hind.
I request Sandeep T. Jain sir to address the participants.
Good afternoon, everyone.
Good afternoon.
Respected dignitaries, Shri Sumit Kumar, Principal ADG DGTS Mumbai Zonal Unit, Srimati Reena Gangwani, AAD DGTS, Shri R. Srivatsan, Speaker and Assistant Commissioner, Nasin Chennai, Shri Naveen Kumar Sharma, Vice President MRAI, Shri Vikas Kumar Banka, Tax Advisor MRAI, BME Office Bearers, Directors and Members, distinguished guests and friends from the trade and industry. Bombay Metal Exchange Limited for over 9 decades has been a cornerstone of India's non-ferrous metals trade, serving a diverse membership base including traders, recyclers, MSMEs and large industries. Today, we are honored to have the DGTS Mumbai Zonal Unit with us to illuminate the complexities of 2% TDS and GST under RCM on metal scrap under the GST Act. Our recent Diwali function where Mr. Praveen and Srimati Rinaji was there highlighted some pressing concerns amongst our members. So the main concerns I would quickly the first was refund process and timelines for unutilized credit. This is particularly relevant for trading businesses. Then time of supply, invoice date, and TDS applicability. We seek clarity on the precise timing and conditions for TDS applications. Then TDS applicability in bill to ship to scenarios. We need guidance on how TDS is handled in these specific transactions. Then impact of fake invoices on GST liability. We want to understand if a fake invoice is the supply chain in the supply chain can block 18% GST at all levels. So that is big question mark. And then safeguards provided by 2% TDS. We aim to clarify whether the 2% TDS mitigates future liability or it is just a self-assessment. So we are confident by this today's webinar will provide invaluable insights and address these crucial questions. Let's make the most of this opportunity for productive dialogue and knowledge sharing. Thank you very much.
Thank you, sir, for your encouraging address. Thank you. And now I request our second panelist, trade panelist, Shri Naveen Sharma ji, to address the participants. Naveen Sharma ji.
Thank you, Reena madam. Thank you, Sumit sir, Srivatsan sir, Sandeep ji, Vikas ji, and other senior officials from CBIC and my industry friends. This particular issue which has come in terms of RCM and TDS on metal scrap, I will like to share a background because a lot of issues which the industry is facing that Sandeep ji has already mentioned, but I would like to share here with the CBIC officials and my industry fellow that what was the major issue in this sector, because pre-GST, this metal scrap, which was generated mostly from domestic and post-consumer scrap, which was attracting only VAT, which used to be 5%. While post-GST implementation from 1st July 2017, the GST became 18% because the excise duty, which was only on the imported scrap and post-industrial scrap, was having excise duty. So this big window of 14% created a challenge for the genuine buyers, recyclers in this industry, because when consumer finally end of life scrap is generated, there is no invoice. So what was happening? The industry recyclers were getting invoice from the trade, and there was challenge of fake ITC, because this 14% was a major chunk. And you would notice that whatever fake ITC cases were tracked by DGEI and other officials, almost 35 to 40% belongs to this sector. So industry, MRAI, PME, and other members were behind the government, and MRI, which is the apex body of recyclers covering ferrous, non-ferrous, plastic, e-waste, were approaching to the government. And this time in 54 GST Council meeting, when we presented before that to the fitment committee, they agreed to our proposal. There were certain challenges because we were demanding that the RCM should be there between B to B also, and the tax should be charged at the recycler end. But there were certain challenges with them, because how they will differentiate between manufacturer and the trader, because there is no such regulation happens in GST. So they came up with an idea of 2% TDS and RCM from non-registered to registered. So, and I'm happy to share with this all challenges. People are able to file their first return 2 days back on 10th November, and the feedback which we got is very much positive. And in time to come, we hope this will bring more transparency. The genuine players will not face any problems. And now trade is interested to know that how they will be protected, because there were such cases wherein department says this apply doesn't exist, and they penalize the recycler who have already paid the complete tax. So I hope in this webinar we'll get all those answers from the CBIC officials and our learned senior officials from NASIM. Thank you.
Thank you, Naveen Sharma ji. Now I request our third trade panelist, Shri Vikas Kumar Banga ji, to address the participants. Sir.
काजी आप म्यूट हैं।
सर आपका आवाज नहीं आ रहा है।
Am I audible?
Yes, sir.
Good afternoon to all. First of all, I like to thank Reena ma'am, all the dignitaries on the dais, Sumit sir, Naveen ji, for giving me the opportunity to discuss today's topic, that is TDS on metal scrap and RCM. Thank you, sir, for giving me the opportunity for today. And I am coming directly to the topic relating to the issues what the trade and industry is facing right now. They have the multiple questions in their mind, and I request today's speaker to address all the issues. Like, first of all, if there is the 2.5 lakhs the limit, whether TDS will be applicable even of the 50,000 into 5 and 60,000 into 5, if crossing the 3 lakhs. I can say that if there is a PO of 60,000 into 5, then contract value of each contract is 60,000. So whether TDS will be applicable in that case or not. This is one of the issue what the trade is facing, and asking the clarification on this. Then the second is, if suppose if a manufacturer who basically deduct the TDS 2% and later on after 1.5 year, 2 years, whether the immunity will be given to the manufacturer that they have complied the additional burden to given by the government on the manufacturer, that the further case will be not built up on that. Because the main aim of the implementation of the TDS is to cover the fake invoicing and bogus billing, and to save our genuine businessmen, manufacturers, all these persons. And the third issue, what I face asking the different industries, whether it is applicable on the intra-state transaction also, interstate transaction also or not. Whether 2% is applicable to IGST or not. So all about this from my side, Reena ma'am, and during the course of deliberation, we will definitely ask some more questions to enlighten ourselves and come up with. Thank you, ma'am, for giving the opportunity.
Thank you, sir. Thank you for encouraging this thing. And now I request Shri R. Srivatsanji, our key speaker, to address the participants and begin with his presentation.
Yeah.
Sir, over to you.
Yes, madam. Thank you very much, madam. First of all, I would like to place my gratitude to the Principal Additional Director General DGTS Mumbai for providing me this opportunity and initiating this program. And I hope this program will be definitely useful for all the participants today. So my first thanks to the Principal Additional Director General. I would also like to place my my gratitude to my Additional Director General also at NES in Chennai, who had been a great source of guidance for me in making this presentation and also creating the content for this webinar. So with these two gratitude questions, I would like to begin my presentation today. I will in fact share a PowerPoint presentation so that it will be useful for the participants also to view what is the content that is being spoken about. So let me share the presentation here. Just a minute. I hope the presentation is visible to everybody. If a line of confirmation, I would proceed further.
Yes, sir. It's visible, sir.
Yeah, thank you, madam. So this is exactly the presentation plan that I am having for today. I'll give a brief introduction about what were the changes that were brought in with reference to the supply of metal scrap and how it emanated. And then I'll talk to you about the TDS provisions, which is in fact a new provision as far as the metal scrap dealers are concerned, because earlier it was not there for all transactions. It was only with reference to government transactions. Now, one more entity has been added to that. That is the dealers or suppliers of metal scrap. Third aspect which I'll be dealing about is about the reverse charge mechanism that has been made applicable whenever the transaction happens between an unregistered person to a registered person, where the liability to pay tax has been shifted to the registered buyer. So this is again another additional compliance obligation that is vested on unregistered person as well as the registered person, because they have to be in line and ensure that the buyer pays the tax properly, which he is liable for. I'll also give you some illustrations on the impact that these changes are going to make with reference to this sector. I'll also give you some conclusions and resource material also with reference to these transactions. So let me begin with this first very important point, that the TDS and the reverse charge mechanism under GST on metal scrap has been brought on the basis of the recommendations made by the 54th GST Council meeting, in which two key changes were proposed. One is about the tax deduction at source for the purchasers of metal scrap from registered persons. And second, very important change is shifting the liability on the purchaser of metal scrap if the transaction is from an unregistered seller. So the reverse charge mechanism will be on the purchaser. So this RCM has been a new concept which is brought to this metal scrap dealers. As rightly pointed out during the keynote address by the Principal Additional Director General, also by the esteemed panelists during their welcome address, this compliance, two very important changes with reference to compliance by the scrap dealers has been brought. Point number one, to tighten the compliance with reference to this sector. Second, also, on the flip side, it will also honor, or it will also recognize the honest taxpayers who want to be absolutely compliant and ensure that the tax liabilities are discharged by the right people at the right time. So to ensure that the entire trail of transaction is captured, this TDS aspect has been brought. Let me confirm you the fact that TDS that is deducted during this course of transaction is not a government revenue. It is something which is collected at the time of the transaction. Subsequently and immediately, the amount that is deducted as tax at source is transferred to the buyer, is transferred by the buyer to the supplier, which can be used for discharging his tax liability. So the intent of having this TDS is not revenue generation, but only to capture the trail of transaction and ensure that the fake invoices and the fraudulent transactions on circular trading or illegitimate transactions, in fact, are discouraged. The RCM also serves this purpose because if the transaction happens between an unregistered person to a registered person, shifting the liability to a registered person will bring down the additional compliance obligation on the part of the unregistered person. So these are two main objectives on the basis of which these recommendations have been made. And all the changes that were proposed by the 54th GST Council meeting, in fact, has been made into a legislative reality. 2 notifications have been issued, the details of which I'll be discussing during the course of this presentation. And the effective date for implementation of this is from 10th of October 2024, which means this process has already taken off from 10th of October 2024. We are almost 1 month since this rollout has happened. And as rightly pointed out by one of the speakers, the first TDS return also would have been filed by the purchaser of metal scrap in case he is obliged to do so. So we already have a system in place from 10th of October, and the return filing process has also begun. And the aspect with reference to reverse charge mechanism obviously will begin because the GSTR1 will contain this information, and also GSTR3B, which is likely to be filed on 20th, 22nd, or 24th, will also begin from November 2024. So this is in effect the 2 key changes that has been brought on the basis of the recommendation of the 54th GST Council meeting. So two sections are very important as far as this TDS is concerned and RCM is concerned. TDS is a liability that is vested in terms of the powers under Section 51 of the CGST Act, where the buyer, notified buyer, in case he purchases from a registered person, he has to deduct TDS, the details of which we will discuss in detail. So in terms of the powers vested under Section 51, a notification number 25 of 2024 dated 9/10/2024 was issued, so that this process comes into place from 10th of October. We also have a provision under Section 9(3). Section 9(3) under the CGST Act, which speaks about the liability to pay tax by the buyer of the supply, and he is responsible for discharging the tax liability. A notification has been issued, 6 of 2024 red notification, which shifts the normal procedure of forward charge mechanism into reverse charge mechanism on the purchaser of metal scrap. So these 2 notifications are very important as far as today's session is concerned, and the provisions of Section 51, Notification 25, Section 9(3), and Notification 6 of 2024 red notifications are quite important for those who are in this sector of dealing with metal scrap. What is Section 51? I have been repeatedly saying that Section 51 gives powers for the government to have a legislative authority to deduct tax at source. Section 51, in fact, gives this power whenever the transaction happens from a registered person to a department, establishment of central government or state government, local authorities like municipal corporation or panchayats or municipalities, or any other government agencies, and added to that public sector undertakings or any society established by central government organizations. If they are the buyer from a registered person, then tax deduction at source will have to happen under Section 51. So the very important question that requires to be answered here is that, are you a person covered under the list of person liable to deduct TDS under Section 51? If the answer is yes, then we need to see the value. If the value of contract is above 2.5 crore, as was rightly pointed out by the Principal Additional Director General during his keynote address, if the contract obligation is more than 2.5 lakhs, and if the answer is yes, then TDS is deductible at the rate of 2% in case of interstate transactions and 1 + 1% in case of intra-state transactions. If the value of supply under a contract is not above 2.5 lakhs, then the answer is no, TDS liability will not be there. So, this is the primary objective of this TDS provisions. And if a person who is not notified in terms of section 51, the answer initially itself is no, and there is no TDS provisions applicable to him. So these are the essential conditions that were in existence in terms of section 51 before issuance of notification number 25 of 2024. Yes. So, as recommended by the 54th GST Council meeting, notification number 25 of 2024 was issued, where it amends the provisions of section 51, which says that any registered person receiving supply of metal scrap falling under chapter 72. So, instead of government agencies, any registered person has been changed now. So, the responsibility is on any registered person when he receives a metal scrap falling under chapter heading 72 to 81 of the first schedule of Customs Tariff Act 1975 from another registered person is required to deduct tax. So this is effectively the change that has been brought in terms of notification 25 of 2024. So three very essential ingredients are part of this notification. So when it comes to obligation with reference to TDS deduction, first of all, the supplier should be a registered person under GST. Second, the recipient also should be a registered person under GST. Third is the material supplied should be metal scrap, and such material should fall under any of the chapters of the Customs Tariff Act, first schedule to Customs Tariff Act, chapter number 72 to chapter number 81. If these three primary conditions are satisfied, then there is a compliance obligation of deducting 2% TDS from the payment to be made by the buyer to the supplier, and then subsequently the amount that is deducted as TDS will be given back to the supplier for him to use it for discharging his tax liability ultimately for such transactions. So three conditions are very important as far as this notification is concerned, which I have listed as 1, 2, 3. If any one of these conditions is not satisfied, then there is no liability to deduct TDS. For instance, if the recipient is not a registered person under GST, a normal registered person, even if the other two conditions are satisfied, there is no requirement for him to deduct TDS. Right. Next question is, yes, I have satisfied all these three conditions. What is the way forward for me? What has to be done as a next step? Next step is that the person who is liable to deduct TDS, a registered person who is liable to deduct TDS, will have to take a separate registration for the purpose of discharging the compliance obligation with reference to TDS. Normal GSTN will not serve this purpose. If I am responsible for deducting TDS, I will have to take a separate registration on the basis of the PAN number. That will also be a digit registration number, just like a GSTN number. Every such person will have to apply for a TDS registration in form GST REG 07. Once this form is once this form is used and an application is made in the GST portal, within 7 days, the TDS registration number will be given. There will not be any distinction with reference to a normal GSTIN and the TDS GSTN number, because both generally are on PAN-based numbers, except for permanent transactions, where the GSTN number is on the basis of a TAN number that is provided to the government organization. So once this registration for TDS is taken under GST REG 07, then subsequently the next compliance obligation starts. You have to deduct TDS, and whatever is deducted as TDS, you have to be incorporated in a return called GSTR 07, and this return will have to be filed by 10th of the next month. And at the time of filing this return, the supplier's GSTN number will have to be mentioned in the return, so that whatever amount is deducted as TDS is actually given back to the supplier, which has been deducted. I will in fact explain this with an example or an illustration in the subsequent slide. What I would like to emphasize here is, if a person is liable to deduct TDS in terms of notification 25 of 2024, take a separate registration by filing GST REG 07. Upon receiving a registration number, start filing the return GSTR 7. Before filing the return GSTR 7, please ensure that the tax TDS amount is deducted from the payments to be made to the suppliers. The supplier's GSTN number is mentioned as part of GSTR 7. Therefore, no, the amount that is deducted flows into the electronic cash ledger of the supplier, and all these aspects will have to be completed by 10th of the succeeding month. Once this return is filed, the amount that is deducted as tax will go to the electronic cash ledger of the supplier, and he can use it for discharging his tax liability with reference to his taxable supplies when he has to file his GST at 3B, which is on maximum 20th of the succeeding month. So they have a 10 days gap within which the entire amount of TDS that was deducted in fact flows into his electronic cash ledger, which can be used for discharging his tax liability for taxable transactions. So I said that third condition, apart from that both supplier and the recipient being registered, third very important condition is that the goods will have to be covered under Chapter 72 to Chapter 81 of the CGST Act. What does these chapters actually cover? We know that Chapter 72 is iron and steel, 73 is articles of iron and steel, 74 is copper, 75 is nickel, 76 is aluminium, 77 is left blank. There is no metal, there is no goods that is mentioned there. 78 is articles of lead, 79 is zinc, 80 is tin, and 81 is other base metals. So any person who is dealing with any of these items, that is iron and steel, or copper, or nickel, aluminum, lead, zinc, or tin, or any other base metals, they have this responsibility of deducting tax at source. The same chapter heading is applicable for reverse charge mechanism also, and therefore, as far as metal scrap dealers are concerned, Chapter 72 to Chapter 81 assumes a lot of importance with reference to their compliance under TDS as well as under RCM. Right. So the next question that comes to our mind is like, what will be the value taken? Yes, now that I have realized that I am liable to deduct tax at source on purchase of metal scrap, and I have taken a registration. My responsibility is to deduct tax at source. So if I want to deduct tax at source, which is on ad valorem basis, two things are very important. One is the value on which the tax rate has to be applied, and what is the rate of tax as far as TDS is concerned. So let me first of all answer the question with reference to value. The value, as per explanation 51 subsection 1, is that the tax deduction shall be on the amount indicated in the invoice, excluding the central taxes, state taxes, union territory taxes, IGST, and cess, which means any tax that is imposed in terms of the GST law can be excluded from the value to be taken for the purpose of calculating the TDS assessment. Second question is, what is the rate at which the TDS will have to be deducted? The rate of TDS, the recipient of the metal scrap, he is required to deduct a TDS at the rate of 2% in the following manner. Let us assume that the purchaser is in one state and the supplier is also in the same state. For instance, the seller is in Maharashtra and the purchase is also in Maharashtra, which means that it is an interstate transaction. The supply does not cross the boundaries of the state of Maharashtra, and therefore it is an intrastate transaction which happens within the same state. And in such situations, the TDS of 1% under the CGST and 1% under the SGST of Maharashtra state will have to be deducted. Now, in another situation, let us assume that the seller is in Tamil Nadu, whereas the buyer is in Maharashtra. It becomes an interstate transaction between Tamil Nadu and Maharashtra. In that situation, also 2% TDS will have to be deducted, but it is categorized as 2% under IGST. So this is done with an intention to ensure that whatever is deducted as TDS goes back to the electronic credit ledger, cash ledger, and that can be used for discharging either their IGST liability or their CGST plus SGST liability when he discharges his tax liability on 20th of the succeeding month. So the bottom line is the value will be the invoice value excluding the taxes that are liable to be paid under the GST Acts, and the rate of tax will be 2% if it is an interstate transaction, and 1% CGST plus 1% SGST in case of intrastate transactions. So these 2 points are very, very important as far as the assessment of TDS is concerned. Let me also make one point very clear that we also have a scheme like TDS deduction under the income tax under Section 80C of the Income Tax Act. But the difference between the TDS under the income tax and the TDS under the GST is that point number one, both are different, both are independent. They have, except for the name TDS, they are not same or similar. Point number one. Point number two, whatever is deducted under the income tax is a tax amount which is collected on installment basis over a period of time. Whatever is paid will be accumulated and adjusted towards the liability towards the end of the year. So what is collected under TDS income tax is a tax, whereas under GST, whatever is collected is not a tax, it is an amount. It has to be immediately given back to the supplier so that he utilizes it for the purpose of discharging his tax liability. This distinction is precisely because income tax is a direct tax where the liability is on the person who earns income, whereas GST is an indirect tax where the person who bears the incidence is different from the person who is liable to pay the tax, and therefore this difference has been made. So I'll again try to explain this with illustration so that everybody is able to understand it better. Now let us assume here that there is a contractual obligation for supply of certain metal items under a contract of 5 lakh rupees. Let us assume that total contractual value is 5 lakh rupees, and maybe it is supplied over a period of 5 months, and the supply value is about 1 lakh rupees. Now let us, for the month of October here, so for the month of October, let us assume that under an invoice, there is a supply of metal scrap to an extent of value of 1 lakh rupees. We know that the rate of GST on metal scrap is 18%. So the transaction value here is 1 lakh rupees, on which 18% is applicable. Here you can see 18% is applicable on such taxable supplies, which means the total GST is 18,000 rupees. Let us assume that it is an interest rate transaction, so that we don't get confused. Instead of 9 plus 9, let us follow 18%. That will be easy for us to understand also. So the total liability is 18,000 rupees. Now you know that the total bill value here will be 1,80,000. Is inclusive of the value and also inclusive of the tax element. Now let us assume that this transaction attracts TDS liability. So which means that the taxpayer will have to deduct the TDS at the rate of 2% because this is an interest rate transaction attracting 18%, and therefore we know that the TDS is at the rate of 2%. And as I said here, the value will be the amount, the amount that is indicated in the invoice. I've already told here, it will be indicated in the invoice. We know that the value of supply here as indicated in the invoice is 1 lakh rupees, and therefore on this 1 lakh rupees 2% is applied and 2,000 rupees is deducted as tax expense. So now the total bill amount is 1,18,000 rupees, out of which this 2,000 rupees is deducted. So the balance 1,16,000 rupees shall be paid to the supplier. So this will be paid to the supplier immediately. What will happen to this 2,000 rupees? This 2,000 rupees which belongs to the supplier is retained by the buyer, and it will be deposited into his cash ledger first of all. And at the time of filing is GST R7, which we were discussing about in the earlier slide. At the time of filing this GST R7, this 2,000 rupees will be transferred from the buyer's account to the electronic credit ledger of the supplier. So that goes into and then gets populated into the electronic cash ledger of the supplier. And whenever this 18,000 rupees is to be paid, this is just an example, not necessarily the same 18,000 rupees. Whenever this liability is to be discharged, this 2,000 rupees can be adjusted for this 18,000 rupees, and he will be paying that tax on 20th at the time of filing the GSTR 3B from the supplier's end. So this is how the entire transaction actually happens. Out of 1,18,000 rupees, 1,16,000 rupees will be given straight away. There will not be any issues on that. 2,000 rupees, which is 2% on 1 lakh rupees, will be retained by the buyer, and this 2,000 rupees also will be immediately sent back or given to the supplier before he files his GSTR 3B return of the subsequent month when he discharges his tax liability of 18,000 rupees. So this is how the entire transaction happens. So once you understand this concept, how the assessment of TDS is being done, and also how the process of deducting tax and subsequently transferring that tax amount to the buyer, to the seller by the buyer happens. You will be able to appreciate two things. Point number one is that whatever is deducted as 2,000 rupees is not tax. It is just an amount which is subsequently transferred to the seller for him to use it to discharge his tax liability. And second is, we have no revenue implication, additional revenue implication, or additional stress on finances, or additional money flow here. It is only to capture the trail of transactions, because we had a lot of difficulties in controlling fake invoices, circular transactions, in which illicit ITC has been availed across the sectors. And this is one of the methodology that has been evolved by the tax officers to ensure that the honest taxpayers are recognized for whatever is the liability that they are bearing the instance of. At the same time, it also discourages that malpractices which are in existence in this business entities. Right. So there are some exemptions also from deduction of TDS. In the following scenarios, TDS is not required to be deducted. Let us be very clear. I have also given one example so that we understand it better. But before going into the example, let me give you what are the conditions or what are the scenarios under which TDS is not required to be deducted. When the supplier of the metal scrap is registered, but the recipient is an unregistered person. So in that scenario, TDS is not required to be deducted. Supplier is an unregistered person, whereas the recipient is a registered person. In that scenario also, TDS is not required. Both supplier and recipient are unregistered person. In that scenario also, TDS is not required to be deducted. Why? Because both the buyer and the seller will have to be a registered person to invite this compliance obligation of TDS. Because unless you are a registered person, first of all, no, you cannot deduct that 2,000 rupees. The example which we saw earlier. Second is, even if you deduct the 2,000 rupees, unless you are a registered person, unless you have a GSTN number and an access into the GST portal, you cannot transfer the 2,000 rupees to the registered seller. So in these scenarios, registration by both seller and the recipient are quite important. The fourth point is when the total value of supply under a contract does not exceed 2,50,000 rupees. So there has to be a contractual obligation to invite this TDS liability. Even let us assume that there is a contract of 5 lakh rupees. We saw in the earlier example that the invoice carried only a transaction value of 1 lakh rupees. It was not more than 2.5 lakh rupees, but the contractual obligation was more than 5 lakh rupees. And therefore, even though that 1 lakh rupees is less than 2,50,000 rupees, the TDS liability comes into play as far as the transaction is concerned. So the bottom line as far as point number 4 is concerned is, if the value of supply under a contract exceeds 2,50,000 rupees, the contractual obligation should be more than 2,50,000 rupees. Even the value of individual invoices are less than 2,50,000 rupees, TDS will have to be deducted. So that is something which the person who is liable to deduct TDS will have to understand. Then if the location of the supplier and the place of supply are different from the state of registration of the recipient, in such situation also TDS is not required to be deducted. This may look a little hypothetical as far as the metal scrap is concerned, because we don't have such a scenario in general, right? Like the place of supply is always the place where the recipient or the buyer is located. This problem comes more often than not as far as supply of services are concerned. But as far as metal scrap is concerned, this may look a little hypothetical. You may not encounter this problem, but still, for the sake of understanding, I have included this also as part of my presentation, so that we understand that there are certain situations which does not require TDS deductions which are exempted. So let me recapitulate whatever I have said. Let us understand that the supplier, the location of the supplier is in Tamil Nadu. The place of supply is in Tamil Nadu. The person who is receiving the goods, who is the deductor, is also in Tamil Nadu. Then it becomes an intra-state transaction because the goods have not left the state of Tamil Nadu. And in that situation, CGST plus IGST. The answer, whether TDS applicability is there or not, the answer is yes. So in that case, 1% CGST and 1% SGST will have to be deducted. In the second scenario, let us assume that the supplier is in Puducherry, which is outside Tamil Nadu, and the recipient is in Tamil Nadu, and the place of supply is also Tamil Nadu, which means now this has become an interstate transaction. That is from the Union Territory of Pondicherry to the state of Tamil Nadu. The goods have traveled, and therefore it has become an interstate transaction. And in such situations, IGST of 18% will have to be paid. And in those cases also, TDS will have to be deducted if it is more than 2.5 lakhs contractual obligation, and 2% IG will have to be paid. There was one question that was asked during the course of the welcome address, whether interstate transaction invites the liability of TDS deduction. So I have categorically answered reference to this slide. Even interstate transactions attracts 2% TDS liability on IGST payment. So it has to be 2%. And the third scenario which I was telling here, like the place of supply is different from the state of registration. So I have given you an example. The supplier is in Pondicherry. The place of supply is Pondicherry, whereas the deductor actually is in Tamil Nadu. Then it becomes an intra-state supply of Pondicherry, and in such situations there is no requirement for deduction of taxes, because even if you deduct 1% SGST of Tamil Nadu, it cannot be used in Pondicherry because SGST of Pondicherry is different from SGST of Tamil Nadu. Both are not fungible, and therefore this in such transactions where the location of the supplier and the place of supply are different from the state of registration of the recipient, in such cases TDS need not be deducted, for the single reason that the SGST portion of the TDS deducted by the buyer will not be useful to the supplier even if you transfer it into his electronic cash ledger. So points, very important points to be considered as far as TDS is concerned is that for TDS, the value of supply shall be taken excluding the value of CGST, SGST that is indicated in the invoice. So this is very, very clear. So the example which we saw, we saw that TDS is deducted only for 1 lakh rupees and not for 1,18,000 rupees, which is inclusive of 18% GST. The deductor is required to obtain a separate registration for TDS deductions. So that is also very important. And this registration is different from a normal regular registration. Even if he is a registered person, for the purpose of TDS deductions, he will have to take a separate registration under GST REG 07, and he has to file a monthly return in form GST R07 within 10th after the end of the month, in which the TDS that is deducted will have to be transferred to the supplier on the basis of the GSTN number of the supplier. And once GSTR 7 by the deductee is filed, the deductor is filed, the deductee, that is the supplier, will get his electronic cash ledger auto-populated, and it can be used for discharging his final liability. Right. If the deductor fails to pay the amount of TDS deducted into the government account, then for every day of belated payment, 18% interest is charged, 18% per annum, or no, at least it shall boil down to 1.5% per month. That liability will accrue for every delay of such TDS payment to the government. The deductor, as I said, will have to file his GSTR 7 return, and the refund to the deductor or the deductee on account of erroneous deduction shall be dealt with under the provisions of section 54. So if TDS is deducted in cases where TDS is not required to be deducted, then the person who has deducted this TDS can apply for refund under section 54. That shall be a separate process, not getting clubbed together here. But no refund shall be granted to the deductor if the amount deducted, that is, if the TDS deducted has already been credited in the electronic cash ledger of the deductee. So there are certain situations probably which did not warrant deduction of 2% TDS, but the buyer inadvertently has deducted 2% TDS, and has also consciously transferred this amount into the electronic cash ledger of the supplier, that is the deductee. In that situation also, even though it is a wrong TDS deduction, the deductor cannot apply for refund because the benefit has already been passed on to the supplier. So, as I said, electronic cash ledger is quite important. Whatever is the amount that is deducted as TDS goes and gets deposited into the electronic cash ledger and is reflected in the return of the deductor in GSTR 7. Similarly, that is also seen in the electronic cash ledger of the supplier, where he can use it for discharging his tax liability. So electronic cash ledger is one which is very important as far as TDS is concerned. Electronic credit ledger does not have any role to play here because whatever is deducted goes into the electronic cash ledger. Next question is like, when whether the refund of excess balance of TDS in cash ledger is admissible. For instance, let us assume that I have my supplies made to a person who is liable to deduct TDS for me. He has also faithfully deducted TDS and transferred it into my electronic cash ledger. Subsequently, I find that there is no taxable supply that is to be affected by me. I have no liabilities for my future, but I have a substantial unutilized credit that is available in the electronic cash ledger, which got populated precisely because of the fact that this TDS amount was actually transferred by the TDS deductee to the to me, that is the supplier. So in case there is an unutilizable balance in the electronic cash ledger, that balance can be obtained as refund subsequently also. So in terms of Board Circular 166 in the year 2021, it has been very categorically clarified that any amount which remains unutilized in the electronic cash ledger after discharging all the tax dues and other dues payable under the GST law can be refunded to the registered person as excess balance in the electronic cash ledger. And this can be dealt with in terms of Section 54 of the CGST Act read with Section 49 of the CGST Act. So these two sections permit the taxpayer to claim the excess amount that is lying in his electronic cash ledger, which is unutilizable, even though it is populated because of the TDS from the buyer. So this is a very important point. Most of the taxpayers are not aware of that. In case of excessive unutilizable balance in the electronic cash ledger, that can be claimed back as refund in terms of Section 54 of the CGST Act. What is the liability for the purchaser apart from the TDS? You know that generally, you can see here that as far as TDS is concerned, it is in a majority situation, the compliance obligation is on the purchaser. He has to deduct TDS and then transfer it to the supplier. Similarly, you also have one more obligation on the part of the purchaser called reverse charge mechanism. Generally, under the GST Act, every transaction which becomes a taxable supply, the liability to pay tax is always on the supplier, which we call it as forward charge mechanism. Whereas in certain situations, in certain supplies, in certain categories of persons who affect supplies, or in certain categories of supplies itself, either on the basis of supply of goods or on the basis of supply of services, the liability to pay tax is shifted from the supplier to the buyer. So this shift is called reverse charge mechanism, and there are a lot of goods and a lot of services which attract reverse charge mechanism. One more addition to that is whenever there is a purchaser of metal scrap, if he satisfies certain conditions, then the liability to pay tax is shifted from the supplier to the buyer. So that is called reverse charge mechanism. Earlier, we had this reverse charge mechanism notified for a variety of goods and the services in terms of notification 4 of 2017 and 13 of 2017. But recently, after the recommendation of the 53rd and 54th GST Council meeting, a new notification has been issued, 6 of 2024, rate notification dated 8th of October 2024, where the GST liability on supply of metal scraps falling under Chapter 72 to 81 by an unregistered third person to a registered person is required to be paid under reverse charge mechanism. I will be explaining these things in detail as I did for TDS also in the subsequent slide. So the bottom line here is, if there is a supply of metal scrap falling under chapter 72 to 81 by an unregistered person and the purchaser is a registered person, the liability to pay tax at the rate of 18% is on the registered buyer. So that is something which is very important to note. So the registered recipient is required to pay GST under reverse charge mechanism situations. This, in fact, this photo will clearly explain to you what is normal tax mechanism and what is a reverse charge mechanism under the GST law. Right. What was the recommendation of the GST Council? 54th GST Council recommended RCM on metal scrap, especially for B2B transactions. It has provided a lot of clarifications on RCM, and this will also have a substantial impact on the business in the scrap industry. So there is no additional registration that is required to be taken just because reverse charge mechanism has been cast on you. This reverse charge mechanism is cast only when the seller is unregistered while the buyer is a registered person. And therefore, there is no requirement for taking additional registration, unlike what we saw as far as TDS deductions are concerned, where a separate registration will have to be taken. And this will apply until a point, like what I said is that the registered recipient of metal scrap will bear the responsibility for paying GST on the supply as long as the supplier remains unregistered person. So as far as goods are concerned, we have a threshold limit of 40 lakh rupees. So up to 40 lakh rupees, a business entity can sell scrap and remain unregistered. So if a registered person buys scrap from such unregistered person, then the liability to pay 18% GST on this transaction will lie on the registered buyer. This will apply until a point where the supplier crosses the prescribed threshold limit of 40 lakhs. So the next question that comes to my mind is, yes, I have a threshold limit of 40 lakhs, so up to 39 lakh rupees, I need not bother as a supplier to take a registration. The responsibility to pay tax on all my scrap supplies will be on the registered recipient. Now I am in the verge of crossing my 40 lakh threshold limit. So once I cross this threshold limit, then the liability will shift from reverse charge mechanism to forward charge mechanism, where when supplies, I become a registered person, I am supplying to a registered person, and therefore the reverse charge mechanism will not work there. So I will myself be the person liable and responsible for discharging the tax liabilities, of course, after collecting it from the registered buyer. So what does this ensure? This ensures that the metal scrap transactions are taxed regardless of whether the supplier is registered or not, and it has in fact broadened the tax base. Apart from broadening the tax base, whatever is the tax that is paid under reverse charge mechanisms can be taken as input tax credit by the registered buyer, and that can be used for discharging its tax liability, which means there is no additional burden, but it in fact captures the entire trail of transactions. The liability is shifted, and there is no requirement for an unregistered person to register and then paying taxes. So the registered recipient himself will comply with all the GST regulations and compliance obligations. Right. As a person who is liable to discharge my tax liability under reverse charge mechanism, 5 very important points are to be noted. First of all, as a person responsible to discharge tax under reverse charge mechanism, I should first generate a self-invoice, because the invoice on which this unregistered supplier makes supply to a registered person, he will not show any tax liability on that, because the liability is shifted to the registered buyer. And therefore, in order to account it properly, a self-invoice will have to be generated by the recipient of supply, who in fact discharges the tax liability. So the self-invoice will be the assessment document to decide the quantum of tax that is liable to be paid under the reverse charge mechanism. Second very important point is, recently the GST law also has been amended to to make it obligatory on all persons who are liable to pay tax under reverse charge mechanism to raise a self-invoice compulsorily within 30 days of the taxable supply. So this has to be done. In case it is not done, the assessments done under any other document will not be considered proper and is not in line with the compliances expected by the GST law. The second very important aspect, as far as self-invoice is concerned, this is one document on the basis of which whatever is the tax that is paid under reverse charge mechanism can be taken as input tax credit. So for taking input tax credit, you require a document. It has to be properly shown in GSTR1 table 4B1, and it gets auto-populated in GSTR2B, and which can be taken as credit in the electronic credit ledger GST PMT02. So unless self-invoice is raised, these things will not happen seamlessly, and therefore it is suggested and advised that all those on whom the reverse charge mechanism has been cast will have to raise a self-invoice in 30 days of supply. One more very important aspect as far as reverse charge mechanism is concerned is that this tax will have to be paid only by cash. You cannot use your balance that is available in electronic credit ledger to discharge your reverse charge mechanism liability. That has to be done only in cash, but whatever is paid as cash can be subsequently taken as input tax credit and can be used for discharging their future liabilities. So this RCM, as I said, has started from 10th of October 2024, and the return carrying this reverse charge mechanism in GSTR1 should have been filed by 11th of November, that is yesterday, and GSTR 3B, which is through which tax liability are discharged, shall be filed on 20th, 22nd, or 24th of November. So the first returns, GSTR 7 for TDS would have already been filed on 10th. GSTR 1, including the RCM liability, would have been filed on 11th, and the GSTR 3B return for the month of October, including the RCM liability, will have to be filed by 20th of November 2024. So these are very important dates that one should remember, so that you don't end up with additional tax liabilities beyond GST, like interest, late fees, and penalties. I'll just try to give you a snapshot of whatever I have been speaking so far with reference to TDS liability and reverse charge mechanism, so that you understand it better. The scenarios are like, I have categorized the supplier and the recipient's registration status, which finally decides about the applicability of TDS provisions and also the applicability of reverse charge mechanism. This can be used for self-evaluation also, right? Like, you can try to answer this question yourself, so that you can evaluate whether you have understood the concepts very clearly, because unless you understand the concepts, the compliances are only consequential. Therefore, let us see the various possible scenarios that are there in this topic. One is both the supplier and the recipient are registered. The applicability with reference to TDS, the answer is yes. So the registered recipient will have to deduct TDS at the rate of 2% and transfer that amount to the registered supplier. And as far as the applicability of reverse charge mechanism is concerned, the reverse charge mechanism comes into play only when the supplier is an unregistered person while the recipient is a registered person. So here the answer is no. Next question is between a registered supplier and an unregistered recipient. So if the recipient is an unregistered person, there is no TDS option for him. He need not deduct TDS at all in this scenario. And as far as reverse charge mechanism is concerned, again, the registered person will be paying tax at the rate of 18% on supply of metal scrap at the under forward charge mechanism. It will not fall under the reverse charge mechanism. So if the supplier is an unregistered person and the recipient is a registered person, again, the applicability of TDS provision will not be there. And as far as the RCM is concerned, the answer is yes. The unregistered supplier has got no obligation, while the registered recipient will have to pay tax at the rate of 80% on the value of supply. If both are unregistered, obviously, they will not come into the GST scenario at all. So what I want you to understand here is that registered person will not have both the obligations together. So if a person is registered, you can see here it is only the TDS liability on the recipient that comes into play. Here I will explain this. TDS liability on the recipient that comes into play. And if the recipient is again a registered person here, he has no TDS obligation, whereas no, the reverse charge mechanism comes into play here. So both are independent of each other. They don't have concurrent impact. They are like two parallel lines, no, which never meet. So therefore, no, it is not. What has to be understood here is that both registered and unregistered persons are covered, but independently. One, when he has a TDS liability, he will not have any other liability. But when he has RCM liability, he may not have liability. So both are complementary to each other. The next, one more question, which generally comes into the mind of all these waste and scrap dealers, metal scrap dealers, is that whether RCM is applicable in case of transactions like the old washing machines which are in exchange of by a washing machine dealer, a gas stove or an old computer like that. In these situations, we need to see what is the definition of waste and scrap of metals, which in fact has been defined under the chapter heading of chapter 72 of the Customs Tariff Act, which says that it is all waste and scrap metal. And adding to that a little bit of clarity, metal goods definitely not usable as such because of breakage, cutting up, wear and tear, or for any other reason. If they are treated as something which becomes unusable, then they become a scrap of waste, and they become a scrap of waste, and they get covered under the category of metal scrap, and therefore these legislative obligations will have to be followed with reference to them. So what are the main impact for business entities? So people feel that it has increased the compliance obligations. Business will need to implement stricter compliance measures, including maintenance of accurate documentation, timely filing of TDS returns. Failure to comply could lead to penalties and legal repercussions under the GST law. So probably people feel that this has increased their compliance obligation. But let us be very clear on the fact that all these compliance obligations have been brought as part of the legislation only to ensure that the honest taxpayers are not deprived of the due benefits that are extended by the GST law. At the same time, the fraudsters who are involved in fake invoices or circular trading with an intention to avail pecuniary benefits out of the GST law, which they are otherwise not eligible, become a beneficiary of that. It is not tolerable by the legislation. Therefore, even if it is a little increase in the compliance obligation, let us feel it as a fact that it is with an intent to actually protect the honest taxpayers rather than punishing the fraudsters. Operational adjustments are required. Definitely, the companies involved in metal scrap transactions, in fact, they have to review their internal processes and incorporate these new tax obligations effectively. But this is a one-time measure, right? So it is not going to be a perennial measure. You have to understand what are the new tax obligations with reference to RCM and with reference to TDS. If they are incorporated as part of the accounting process, be it electronic or physical, which includes training of the staff and updating the accounting practices, then they will align into the required new legislations and regulations, and that will follow seamlessly. Then these changes reflects a broader strategy by the government also to enhance better tax compliance with probably high risk sectors like metal scrap trading, and it also helps in expanding the tax base and reducing revenue leakages. So tax base also will be increased by ensuring that compliance obligation increases, the tax base also increases. At the same time, the scope for fake invoices, circular trading, and illicit transactions will also come down. So the risk of revenue leakage also will come down. So these are essential aspects with reference to the reverse charge mechanism. I would like to wrap up whatever I have said so far, then go on to the question and answer session. First of all, I spoke about the TDS liability. Let me make it very clear that TDS liability is on the notified registered person when supply of metal scrap falling under Chapter 72 to Chapter 81 are made by registered suppliers. And the value on which the TDS will have to be deducted is the bill value, excluding the taxes that are levied under the GST Act. And the rate of TDS to be deducted is 2% in case of interstate transaction and 1% plus 1% is GST in case of intrastate transaction when both the supplier and the recipient are in the same state. And these are applicable only for metal scrap dealers in which the goods fall under the chapter heading 72 to 81. And I have explained to you what are the factors that are covered, right from iron and steel till the chapter 80, which deals with tin, and chapter 81, which deals with base metals. And with reference to reverse charge mechanism, this happens only in situations where the supplier is an unregistered person and the recipient is a registered person, and the registered recipient is liable to pay GST under reverse charge mechanism till the supplier crosses the threshold limit of 40 lakhs in case of goods. Otherwise, there is no requirement for reverse charge mechanism. And reverse charge mechanism, the assessment is done on self-invoicing basis, and the tax under reverse charge mechanism shall be discharged only through cash, but whatever is paid as GST under reverse charge mechanism through cash will be eligible for taking credit, subsequently use it for discharging the taxable supplies, because all these aspects are in the course or furtherance of business. All these aspects which I spoke today, the resources are available in the CBIC's official website, the URL of which I have given here, which is flashing in the PowerPoint presentation, and one can access that particular site and then get all the information with reference to RCM and TDS liabilities. To end, I would like all the participants to remember two sections with reference to these topics. TDS is under section 51, for which a notification number 25 of 2024 has been issued. And for reverse charge mechanism, the liability is cast under section 9 subsection 3 of the CGST Act, for which a separate notification 6 of 2024 has been issued. And in terms of first schedule to Customs Tariff Act, please refer to chapter 72 to chapter 81. I hope I have comprehensively covered all the aspects with reference to these topics of TDS and RCM. And I feel that most of the questions which would have been in the minds of the participants, I think probably I had already answered. But still, I would like to take the questions one by one that is available in the chat box. So I stop my presentation here and then move on to the question answer session. Thank you very much.
Sir, before that, I request Pankaj Saab to summarize in Hindi. Few of the participants have requested to summarize.
Yes,
you can just.
Pankaj ji, unmute करिए please.
Audible?
Yes, sir.
Thank you.
Thank you.
Thank you, ma'am, for giving the once again opportunity to discuss this topic, metal scrap. ये पूरा जो अपना डिस्कशन हुआ है मेटल स्क्रैप का, इसमें एक नया जो प्रोविजन लाया गया है 10 अक्टूबर 2024 से, इसमें दो नोटिफिकेशंस नए आए हैं। एक नोटिफिकेशन नंबर 25 है, एक नोटिफिकेशन नंबर 6 है। 6 है सीटीआर का और 25 है अपना टीडीएस प्रोविजंस के लिए। सबसे पहले अंडरस्टैंडिंग की ये जरूरत है कि दोनों नोटिफिकेशन में जो डिफरेंस है, जब हमारा B2B सप्लाई होगा, मतलब रजिस्टर्ड पर्सन से रजिस्टर्ड पर्सन को सप्लाई होगा, तो टीडीएस की एप्लीकेबिलिटी है, उस समय आरसीएम की एप्लीकेबिलिटी नहीं है। आरसीएम की एप्लीकेबिलिटी चैन में सिर्फ फर्स्ट चैन में, जहां पे अपना अनरजिस्टर्ड पर्सन से रजिस्टर्ड पर्सन जो परचेज करेगा, उस समय 18% का आरसीएम लगेगा। उसके बाद की किसी भी चैन में आरसीएम नहीं लगेगा, जहां पर जीएसटीआईन सप्लाई टू जीएसटीआईन सप्लाई होगा। इज इट क्लियर? ठीक है ना? अब आते हैं सेकेंड स्टेज में। सेकेंड क्वेश्चन आता है हमारे पास कि भाई परसेंटेज ऑफ टैक्स क्या होगा? टीडीएस अगर अपना लगना है या आरसीएम लगना है तो क्या परसेंटेज ऑफ टैक्स होगा। तो आरसीएम के लिए फ्लैट 18% टू ऑल द चैप्टर्स ऑफ 72 टू 81 दैट आई विल कवर। मैं आगे बताऊंगा कि 72 से 81 में है क्या और कैसे उनको कवर करना है, क्या है उसमें। सबसे पहले आरसीएम 18% लगेगा कोई भी चैप्टर में फॉल कर रहा हो तो, चाहे वो 72 का हो, 82 का हो, 74 का हो, 75 का हो, कोई भी चैप्टर में फॉल कर रहा है तो 18% ही आरसीएम लगेगा। उसके बाद जब टीडीएस की जब सीन आती है तो टीडीएस हमारे जो लगने हैं वो 2% लगने हैं। वो डिपेंड करेगा अपना प्लेस ऑफ सप्लाई क्या है। अगर विद इन द स्टेट है, दैट मीन्स कि अगर हम बंगाल से परचेज कर रहे हैं और बंगाल में ही प्लेस ऑफ सप्लाई है तो 1% सीजीएसटी, 1% एसजीएसटी लगेगा। लेकिन अगर ये प्लेस ऑफ सप्लाई हमारा गुजरात हो गया तो हमारा 2% का आईजीएसटी लगेगा। ये यहाँ पे प्रोविजन नया आया है। ये अब हमको क्वेश्चन आता है कि सर मैं ये जीएसटी जमा कैसे करूंगा। तो जमा करने के लिए सबसे पहले जो उनको टीडीएस काटना है उनको अपना एक नया रजिस्ट्रेशन लेना होगा। रजिस्ट्रेशन का जो बेस होगा आइदर पेन बेस होगा या फिर 10 बेस होगा, ये चॉइस टैक्स पेयर की है। बीइंग ए कंसल्टेंट मैं सजेस्ट करूंगा 10 बेस, इफ 10 नंबर अप्लीकेबल है, अवेलेबल है तो 10 बेस जीएसटी नंबर अप्लाई करिए फॉर डिडक्शन ऑफ टीडीएस, सो दैट कि आपका जीएसटीआई नंबर जो टीडीएस के लिए आपके पास में आएगा वो आप आइडेंटिफाइड कर पाएंगे कि हाँ ये मेरा टीडीएस का है और बाकी के मेरे सारे जीएसटी पोर्टल के हैं, अलग से नंबर है, अपना डिफरेंट आईडी आएगा उसका, वो मिक्सअप नहीं होगा। अगर 10 नंबर अवेलेबल है तो 10 बेस अप्लाई कर लीजिए। 10 बेस जब अपने अपने अप्लाई कर लेंगे तो उसके बाद हमको ये हर महीना 10 तारीख से पहले पहले पेमेंट बेसिस पे, माइंड इट, पेमेंट बेसिस पे हमको टीडीएस डिडक्ट करना है 2%, सीजीएसटी, एसजीएसटी और आईजीएसटी एज द एप्लीकेबल, और 10 तारीख अगले महीने की 10 तारीख से पहले पहले इसको जमा करना है। 10 तारीख से पहले क्यों जमा करना है, इसके पीछे लॉजिक क्या है। अगर हम 10 तारीख को हमारा टीडीएस का रिटर्न नहीं लगाते हैं तो जिनका हमने टीडीएस काटा है 2%, ये 2% का टीडीएस का उनके 3B में उनको क्रेडिट मिलना है। वो जो क्रेडिट लेंगे कैश का उनको एक्सेप्ट करना पड़ेगा टीडीएस को, और एक्सेप्ट करने से उनके कैश लेजर में वो पैसा चला जाएगा। तो जो टारगेट गवर्नमेंट का है कि 2% का जो कैश फ्लो है वो किसी का फंड ब्लॉक ना हो। 10 तारीख को जमा हो गया तो 20 तारीख से पहले पहले अपना 3B लगा करके अपना रिटर्न का रिफंड ले सकते हैं, ये यूटिलाइज कर सकते हैं कैश पोर्शन को। सेकेंड क्वेश्चन है इसमें सर ने जो बताया, जस्ट आई एम समराइजिंग दैट थिंग, और क्या रह गया। हाँ, अब क्वेश्चन ये आता है कि चैप्टर्स कौन कौन से कवर हैं। चैप्टर 72 आयरन एंड स्टील, 73 आर्टिकल्स ऑफ आयरन एंड स्टील, 74 कॉपर एंड आर्टिकल्स ऑफ देयर ऑफ निकल एल्युमिनियम, 77 में कुछ नहीं है, 78 में लेड एंड लेड स्क्रैप एंड आर्टिकल्स जिंक एंड जिंक देयर ऑफ 79 में ये चैप्टर्स में है। अब ये एक मेजर क्वेश्चन आता है, यहाँ पे मान लीजिए लेड स्क्रैप की अपने अगर बात करें तो लेड स्क्रैप में बैटरी इज द मेजर प्रोक्योरमेंट एरिया, जहां पर हम लोगों को बैटरी ज्यादा परचेज करना पड़ता है। बैटरी का चैप्टर हेडिंग 84 है, क्या उस पे टीडीएस एप्लीकेबल होगा?
85
85 है,
85
8549, राइट, 8549 टू बी वेरी प्रिसाइज, 8549। तो जब कोई लेड मैन्युफैक्चरर है जब वो बैटरी परचेज करेंगे तो क्या टीडीएस की एप्लीकेबिलिटी उस पे आएगी? सर योर इनपुट सर,
should I answer this question,
sir,
sir?
your input sir.
Yeah, sir, the notification clearly gives the chapter headings. It starts from 72 to 81. Because batteries fall under chapter 85, there is no requirement to deduct TDS under section 51, or no, there is no RCM also under 93. So because if you classify in the invoices, if you put the description as batteries and the HSN number as 85, then there is no requirement for TDS or RCM.
Right, sir. Right, sir. Sir, then one more question over here is,
Yeah.
in case machinery, scrap of machinery, which comes under the chapter 84, like laptop and other items of printers, which comes under 84, 85, whether is there any liability to deduct TDS and RCM?
Yes, I think I have in fact answered that question also. I think in the penultimate slide of my presentation, like no, I had given examples like washing machine or the old gas stove, or no electronic equipments, which includes no like laptops and all. So if you categorize them as articles of iron and steel, waste and scrap, we know that every chapter under 72 to 81 has got a specific entry for waste and scrap of that particular subsection. So in case you are classifying in those chapters 71 to 72 to 81, then TDS and RCM will apply. But when you are not selling it as under 84 or any other chapter beyond 81, see, for instance, no washing machine, no, you can remove all the metallic items and sell it as scrap of plastic also under chapter 39. I think that was one of the questions that was asked. So in that situation, if waste and scrap is classified under chapter 39 as waste and scrap of plastic, even though they belong to washing machine or no, they are articles of iron and steel, they will not attract TDS provisions. Only if you classify it under any of the chapter headings of 72 to 81, it will attract TDS and RCM applicability. That is very clear in both the notifications 25 of 2024 and 6 of 2024.
Right, sir. Right, sir. That means, to be summarized, only the article which covers under section 15 of the SETA, that is covered for the as a base metal scrap, covered under the section 51 and 9 bracket 3 for the purpose of TDS and RCM. In short, right, sir?
Right, sir.
Thank you, sir.
Sir.
This is ये एक डिस्कशन अपना हुआ ये रिगार्डिंग दिस स्क्रैप एंड ये और सर ने बहुत अच्छी तरह से बताया कि IGST भी लगेगा यहाँ पे है. एक नेक्स्ट क्वेश्चन जो यहाँ पे ग्रुप में आ रहा है रिगार्डिंग द रिफंड. जब हमारा कैश लेजर में जो पैसा आएगा वो कैश पैसा मेरा कितना दिन तक होल्ड रहेगा, क्योंकि इफ सपोज इन एनी केस आई एम नॉट एबल टू यूटिलाइज द इंटायर कैश पोर्शन, then what will the fate of cash balance, whether we can get it refund back in how many days, what is the procedure? So far I understand कि ये जो कैश पैसा आएगा जैसे हम लोग 3D फाइल करेंगे उसके बाद अगर मेरे को रिफंड लेना है तो RFD 01 फाइल करके we can apply for the refund, and जो अंडर प्रोसेसिंग है as per the rule of GST मैक्सिमम 60 डेज की टाइम लिमिट है, तो 60 डेज के अंदर में ही हमारा पैसा वापस हमारे बैंक अकाउंट में चला आएगा with the processing of cash.
Yes, sir. I would like to invite the reference of circular number 166 that was issued in the year 2021, where it has been categorically stated that any amount that is credited in the electronic cash ledger, be it through your own volition or through the TDS deduction, if it becomes unutilizable, you can apply for refund under GST RFD 01, which will be processed in terms of section 54, and a decision will be taken whether to allow it if you are eligible and disallow it if you are not eligible within 60 days from the date of filing the application. And these refunds will have to be filed within a maximum period of 2 years. But as far as this unutilized cash balance is concerned, the relevant period doesn't start because it's already available only in your ledger. So you can do it at any point of time, but once it is filed, it will be given within 60 days of application.
Thank you, sir. One more question I would like to ask over here, sir.
Yes, sir.
कुछ ये जैसे जो contract value,
yes, sir.
Lot of question is in the chat box regarding the contract value.
Yeah.
My PO is 1 lakh each of 10. That means total supply value is 10 lakhs.
Yes.
But the PO as well as invoice, both is of each 1 lakh rupees. Whether do I need to deduct TDS on that?
No, sir. Each and every contract is to be treated separately, right? So if I am ABC Limited, I have entered into a contract with 10 people. Each contract is 2 lakh rupees, which means no, my total contractual obligation with different people, but with the same GSTN number is more than 2.5 lakhs. It cannot be accumulated or it cannot be aggregated that way. The notification clearly says that under each contract, which means if the contractual value is less than 2.5 lakhs or up to 2.5 lakhs, each will have to be seen separately and it cannot be aggregated. So even though if you are having more than one contract and the total value of the contracts exceeds 2.5 lakhs, it will be seen only individually. But the point which I want to make it very clear is, even if the contractual obligation, let us say it is for 5 lakh rupees, which the example I gave, but on the basis of that particular contract, if the supply value is less than 2.5 lakhs, you have to deduct TDS.
Vikas, if possible, can you elaborate it in Hindi for our Hindi speaking audience?
Because it's
Yes,
a
yes,
very
please.
tricky one.
Yeah, please.
ये क्वेश्चन लेट मी फिनिश दिस क्वेश्चन सर. सर एक यहाँ पे इशू क्या आता ना, जितने भी हमारे गुड सप्लायर हैं उसमें वहां पे देर इज नो एज सच कॉन्ट्रैक्ट. Over the telephone, we used to place an order for supply of 500 tons and 1,000 tons like that. And they supply materials on the individual invoice with containing 2 lakhs value on the 500 value, I mean 1.5 lakhs value. What will be the fate in that case, sir? There is no actually a written contract in that case.
Okay. There has to be a contract, sir. So unless contract can be oral, contract can be written, but if the buyer and supplier understands a particular document as a contract, it might be an invoice also, but generally, invoice is not considered as a contract, and you may know that. But if the buyer and seller treats that as a contract and the value exceeds 2.5 lakhs, TDS liability will be there. But if the buyer and seller are not treating it as contractual obligation, because no contract comes with a give and take, whereas no invoice only gives, it doesn't take actually. So if it is recognized as a contract, then TDS comes. If the invoice is not treated as a contract, then TDS will not come.
That means there must be a contract to bypass this 2.5 lakhs rupees.
Yes.
That means if I have a contract of rupees 2 lakhs rupees, 1.5 lakhs rupees, and I have a multiple contracts of 1.5 lakhs rupees, say into 1.5 into 10, then the supply will accordingly 1.5 lakhs, 1.25 lakhs like that. So there is no need to deduct the TDS.
Correct, sir. Perfect, sir.
But sir, in case there are 5 contracts, but the supplier makes single invoice.
Yeah.
In that case,
that is okay, sir. I think sir also has explained it in Hindi. To my understanding of whatever knowledge I have in Hindi, I have understood it correctly. See, there are multiple contracts. Okay, let us assume that there are 5 contracts. All the 5 contracts may not be the supply of same goods also. Right now, you have 5 contracts for 5 different supplies, but you are making the supply together and raising one invoice, right? But because they are covered under multiple contracts, the value of which is less than 2.5 lakhs, TDS is not to be deducted, right? So that is the clear understanding what the law says. But no, honestly, let me actually give you a suggestion. This is only suggestion, not legislative compulsion. In case of such transactions, please keep the invoices separately for each contract. That will help you avoid litigation. Otherwise, it will generally, there are people who are prone for mischievous interpretations also. Therefore, it is suggested. It is not legislative compulsion. It is in the interest of the traders. If you keep the invoices separately with reference to each contract, that will not entail any headaches as far as this compliance obligation is concerned. This is only suggested.
Sir, better, I think, to the better compliance of Section 51 and to comply the legislative intention, we should borrow the definition from the income tax, where it is saying that during the course of a particular financial year, if the threshold limit crossed, then you have to deduct the TDS, like the 194J, 194C under the income tax for contracts. So I think the board come up with the circulars that if the contract value, that means the supply during a particular financial year, crossed the 2.5 lakhs rupees, then you should start the deduction of the TDS, because it is a multiple type of interpretation will involve in the market and will create unnecessary litigation between the taxpayers and the department. होगा क्या ना सर कि आज अपना जो 51 और जो 93 लाने का जो मेन पर्पस है अपना मेन पर्पस है कि जेन्युइन जो टैक्स पेयर्स हैं उनको प्रोटेक्शन मिले फॉल्स इनवॉइसिंग से. And this is the area where this fake invoicing rackets will work out, and they will issue the contract value of 2.4 lakhs rupees, and they will continue issue the multiple invoices, and they will say कि सर आपने तो कहा था कि सर contract value पे लगना है, तो contract value तो मेरा है नहीं.
Yes,
so
it's a loophole.
Boards should come up with the proper clarification to avoid all these litigations.
Correct, sir. But let me also reiterate the fact that it takes 2 hands to clap.
Thank you, sir.
It's a big loophole there.
Yes, sir. So I think this type of practice should be avoided. So otherwise, the purpose of the implementation of this TDS provision is not give the proper result, I think.
Yes, sir. I think no, this point you can take up your association also, no, and forward it to DGTS Mumbai. Probably they will put up in the right forum, sir.
And there is one question I received from Shri Vakharia ji 2 days back, that if a taxpayer has not got his registration in the month of October, he got it in the month of November, and he has deducted certain TDS in the month of October. So in order to comply with things, whether the person can show the October TDS in November month, or how it can be dealt with?
Sir, whatever is paid in the month of October, the TDS deduction shall happen in the tax period of October only. It cannot be shifted to the month of November. But I do agree that because of inadvertence, he would not have shown it in the month of October. So in that situations, if he has already deducted and retained with him, but showing it only in the subsequent GSTR7, it has to be done along with interest, right? So he can pay the interest, which will not go to the seller, but it has to be a cost to himself. So that is the deterrent provision that happens in case if he does not do it within the tax period. But he cannot shift it to the month of November, or no, like he cannot say that I made payment only in the month of November. He cannot short circuit that. The law does not expect that to happen, sir.
I would like to highlight it over here, sir.
Yeah.
What happened, practically what happened, the taxpayer applied for the application in the month of October itself for the better compliances. But
Okay.
somehow the GST portal has allotted the number in the month of November, which effect from the November.
Yes.
They are not able to file their own return for the month of October.
Yes.
So what I suggest to trade practice, subject to your confirmation, is that you deposit the entire amount of TDS in your cash ledger, so that interest can be avoided, and the entire transaction where you fail to report for the October due to the inadvertent mistake by the GSTN, that your entire report in the month of November, because we have no option to file the October return.
Yes.
So TDS can be avoided, and we can report the same thing with the jurisdiction with the cover of letter covering all these anomalies caused by the GSTN. So this is my suggestion, sir.
Yes, sir. I do agree. Being the first month, there could be some hitches which would have prevented them from doing this. If the intent is not bad, probably no, the department will definitely take a lenient view on that. They will not impose penalty. They will not expect you to pay the interest, right? So, but this cannot be repetitive, right? So being the first month or for 1 or 2 months, no, the department will take a lenient view if justifiable reasons are given. I'm sure about that, sir.
And sir, interest in any case, it cannot be levied if I deposit the TDS amount in my cash ledger, because there is a specific circular. The cash is available in the cash ledger, then interest cannot be charged.
Yes, sir.
Yes,
I would, yeah, no, I would like to give a small differentiation between that circular, which was issued recently on the basis of the 50th GST Council meeting, which says that if the amount is deposited in my electronic cash ledger, it almost amounts to the fact that I have paid it to the government. But here, whatever is deducted as an amount, that is a TDS amount, which is not going to the government's exchequer, it has to go to the supplier, because he will be actually using this amount for discharging his tax liability, which you are not entitled to keep it at your whims and fancies. And therefore,
Yes.
no, that circular may not be applicable in this case, but the genuine intention can be, you can tell that as a genuine intention, like you did not have any motive to stop or motive not to collect TDS, but that circular is not applicable here, sir, because the money that you owe is to the buyer and not to the government.
Yes.
One last question I have is, can we prepare a self invoice for all the RCM transactions for that month, or should a separate invoices be prepared for every transaction?
Yes, I have 3 answers for this, sir. So it is always better to have one self invoice for one assessment, because every invoice will have to be reflected in GSTR 2B, right? So if you have multiple transactions covered in one invoice, and if one transaction ends up in a litigation, the entire invoice is covered under the litigation. And therefore, my suggestion is better to have one invoice for every assessment, even though there are multiple RCM transactions. So, and now you can show it in your GSTR1. But As such, there is no legislative moratorium to have one common self-invoice for all the transactions with reference to RCM. Second point which I would like to say here is, if at all you want to put only consolidated self-invoice covering all the transactions in tax period, I would suggest at least do it GST wise. That will help your costs.
Okay.
Sir, one thing I would
Being a very tricky question it is, can you elaborate it for our Hindi audience?
Yes, please.
बंगा जी वो कह रहे हैं कि जो ये क्वेश्चन जब आ रहा था ना, जो एक ही इनवॉइस बना सकते हैं RCM की।
हाँ प्रवीण जी, क्वेश्चन क्या था?
क्वेश्चन था सर कि एक कंसोलिडेटेड RCM का इनवॉइस बनाए या फिर हर ट्रांजैक्शन का अलग इनवॉइस बनाए?
सजेशन सर अलग अलग बनाने का ही है।
मैं इसमें सर एक चीज और ऐड करूंगा, क्योंकि RCM में हम किससे ले रहे हैं? अनरजिस्टर्ड पर्सन से ले रहे हैं, तो वहां पे जनरली छोटा छोटा अमाउंट का कैश ट्रांजेक्शन भी होता है, 5,000, 7,000, 10,000 का। तो आपको सेपरेट इनवॉइस इसलिए बनाना होगा कि वो इनकम टैक्स एक्ट में भी पूरे साल के अंदर में आप कैश में उसको एक एंट्री 10,000 की और 2 लाख से ज्यादा नहीं पे कर सकते हैं, तो उनको देखते हुए बेटर है आप अलग अलग बनाएं।
Yes, yes, yes.
Yeah. And that will help in taking ITC also, sir.
Yes.
Correct.
Sir, one more thing, like at level 1, if the invoice is a fake invoice, and at level 5, if like department gets to know about the fake invoice at level 5, so what happens actually, in complete chain, 18% will be blocked for every transaction, or how it will be actually?
Yes, sir. See, if it is found to be an illicit amount, then nobody is eligible for that credit. So the provisions of section 16 in fact categorically says that it is the responsibility of the person who avails the input tax credit to ensure that the credit is a validated credit and is a genuine credit. If he is not able to establish this at any point of time across the supply chain, if the department comes up with a validated evidence to show that it is an illicit ITC across the supply chain, anywhere it can be recovered. So the responsibility is on the person who avails the credit and not the person who actually passes it on.
Okay, so the whole chain will be affected.
Yes,
and while
sir.
giving refund of 2% actually, so the demand maybe for other cases, if the demand is there and confirmed demand is there, and if it is in litigation, then that will not be considered in while giving 2% refund, right?
So this 2% goes into the electronic cash ledger, and once it goes and falls into the electronic cash ledger, there is no distinction whether it is on account of 2% or on account of your own deposit also. So that color of that 2% is lost because it gets aggregated into the electronic cash ledger, and therefore there will not be any discrimination with reference to this.
So any past demand will be, that will be adjusted towards 2%.
Yes, sir. That is already there actually. If you go and see the provisions of subsection 1 of section 79 with reference to recovery of arrears, it says that if there is an amount that is liable to be paid by the government and there is a liability on the taxpayer, that can be adjusted, of course, following the principles of natural justice.
We have one question from Hina Metals. Payment for GST paid at customs while clearing the imported scrap will be considered as cash ledger or credit ledger?
No, at the time of import, I think that was already clarified by Principal Additional Director General. There is no TDS. Let us be very clear on that. For imports, there is no TDS, even though the supplier is an unregistered person, right? But whatever at the time of import, whatever is paid is under reverse charge mechanism by the importer, and that will be only IGST, and it is taken as ITC. That's all simple.
Yes, sir.
Beyond that, there is no litigation on this, sir.
मैं सर इसको और क्लियर कर देता हूँ सर। हम लोग जब भी इंपोर्ट करते हैं ना, तो इंपोर्ट करते समय बिल ऑफ एंट्री से पेमेंट करना पड़ता है, और बिल ऑफ एंट्री में कस्टम हम लोगों को कैश जमा करना पड़ता है, और यही पैसे हमारे 2B में आते हैं एज ए इंपोर्ट पेमेंट एट RCM। और रूल 36 सब रूल 1 क्लाउज D में बिल ऑफ एंट्री इज द बेसिस ऑफ टेकिंग द क्रेडिट। सो ये सारी क्रेडिट हमारे इलेक्ट्रॉनिक क्रेडिट लेजर में ही आएगी, हमारे कैश लेजर से मतलब नहीं है इसको।
और सर
एक ऑलरेडी बीइंग पेड थ्रू द बिल ऑफ एंट्री।
एक आखिरी क्वेश्चन है, लास्ट क्वेश्चन फॉर द डे। व्हाट इज द टाइम लिमिट टू यूटिलाइज द TDS फंड available in your cash ledger? I think there is no limit for that.
There is no limit, sir.
Till the end of universe, sir.
You want to keep your cash for free without interest in the government, you can keep.
Yes.
Yes, sir.
If you are financially sound, you can go ahead till eternity. There is no limit for that.
So with that note, sir, I thank you all for joining this webinar and making it a very funful at the end. We all jump into the discussion and it is really very good to have. Thank
Sir,
you so much.
let me thank Vikas Banka sir for enriching us through this Hindi thing. It was quite interesting for me also to hear from him whatever Hindi that I know actually. I hope he has translated it in proper Hindi actually. I cannot validate that, but still I was able to absorb.
Banka sir was a help to us.
Yeah, so it was quite interesting to
But
hear
your
from him.
presentation
So,
was very well explained, the slide, and you used the digital thing, yes, no, and all that, very good. And to my trade members, I would like to mention here that let us wait for another 3-4 months. Things will improve, and it is for the betterment. And the two clarification which are due, which are already MRAI, BME, which we are approaching to the ministry, because as we mentioned, lead acid battery or batteries, they are basically containing metal. Majority of goods inside the batteries of 78 chapter or 79 chapter, but they classify in electrical goods 85. So soon that will also come, because their generation is even more than aluminum generation in the country. So that is required there. And what I heard from the trade, the other sectors which are even bigger than all these metals, the plastic, tire, paper, glass, they're also keen to have the similar type of mechanism where RCM and TDS should come. So we hope the GST Council will take to this to further and will implement on these products as well. And wherever any doubt, we'll approach to you, sir, through email and through headquarters, madam or some.
Yes, sir. Yes, sir. Always write an email to us, sir.
Yeah.
And I think with this, we end this presentation.
And the presentation, please share the presentation. We will circulate it.
We have already shared, but I'll just check it and we'll share it to all the 3 panelists.
Okay.
Thank you.
Right, sir. And R. Srivatsanji, thank you so much, sir, for your elaborate and excellent presentation and throwing light on the finer aspects of TDS and GST under RCM on the metal supply of metal scrap. And thank you all our trade panelists. Nice of you to be here. And whatever you need any clarifications, we can just clarify, and we will share the PPT with you.
Yeah.
And then we get back to you.
Yeah.
And I hope you'll join for the second webinar, the next webinar.